Again, good evening, everyone. My name is Nixon. I'll be your host for tonight's webinar. Tonight, we will have charting markets beyond the guesswork, building a winning portfolio with a simple systematic trading strategies by Wei Ren. So let me just move through the slides. As some of you may know, this charting market series of webinar is part of the bigger Learn from the Pros series of educational webinars that we are bringing to the public for free. If you are interested to find out more, do feel free to just scan the QR code. And let me also share the link in the chat box so you can access this URL as well. So from here, you would be able to, okay, hold on, let me just cut the link first. Give me a bit of time because there's a lot of screen up on my computer. All right, so this is the charting Learn from the Pros website where we bring market experts to share a vast market outlook as well as their trading and investing expertise. So let me move my slides. So today, in this current series, we have 3 market experts with us. Of course, we have Wei Ren, who is with us today. We will also have Kong Hao. Later on, I'll share his session, which is also this month, towards the end. And Ho Sing Fu will be sharing with us his trading methodology. That will be sometime next year. Right, so before further ado, let us go through some quick disclaimer. So do bear in mind that whatever we share today is for educational purposes only, and it does not indicate a trade recommendation or investment recommendation. So do your due diligence and check with your licensed financial advisor if you plan to do any investing or trading. So with that out of the way, we'll be taking questions in today's session. So any questions that you have, please feel free to key in the chat box, the Q&A box arrow here on Zoom. And try to avoid on the chat box because it can be quite confusing for Wei Ren and myself to sort through the questions if it's in the chat box as well. So as much as you can, any questions you have, please key in the Q&A box and we will come to them. Any other matter, chatting, you can feel free to put in the chat box. And of course, if you wish to ask questions directly, you are more than welcome to just click on the raise hand icon and I can come and unmute you and you can speak freely. So back to today's session, we have charting markets with Wei Ren. And in this series of charting market, we will be learning from Wei Ren a simple and non-discretionary trading approach about how to uncover valuable insights through macro analysis and learn to interpret analyst reports. And of course, using something that Wei Ren is very good at, the power of technical analysis and putting everything together so that we can actually build our own trading winning portfolio. So I think most of you will already know Wei Ren. He is a market strategist and a certified market technician with CGS International Research and has more than 12 years of experience looking at the market and sharing with the audience like us about his outlook for the market. So without further ado, I just want to pass the stage now to Wei Ren. Wei Ren, please go ahead.
Thank you for a kind introduction, Nixon. Good evening, everyone. Okay, so just want to do some checks. You can type in the chat. First, you can hear me clearly and loud and clear and see my slide. Please type 1 into the chat. If not, you can just let me know you can't see and then we can see what happened. All right, so another thing is first time here listening to me also. You can also put 1. I mean, not one. Put first time. Your first time, you say your first time. All right. If not, I see some familiar faces. So for those who are really in the first time for listening to this for the first time, I won't be going through what's the previous session because majority of you all will have already know what is it on it. So if you can, okay, Naomi, first time, all right. Thanks for joining. All right. Is after today, do rewatch what I've shared on the June one because the June one is really a bit heavy. It's more about top-down approach, sector rotation, macro indicators. Today I will just touch slightly on the macro front. Because there are some updates that I would like to share, especially after last Monday, there's a very strong sell down across all markets in around the world. All right, so without further ado, I think disclaimer, I think I won't need to go much on it. Today is purely educational. Please do not buy and sell based on whatever I shared today. If you need any trading advice, please look for your remisier or your licensed trading reps, so that they can direct you on this. All right. Okay, so I want to do some recap today. Before that, just want to go through some agenda. Today I will just touch on mainly on the indicators of MACD. I think some of you have very emailed me the very strong desire to know why the indicators, what are they used for, and stuff like this. Okay, so then after that we will go to the live charting, and then Q&A. You will ask me any stocks you like me to ask. You want to ask the stock from Zimbabwe, also no problem. As long as you can give me the code, type it out, and then we can do analysis. All right, but at the same time, when you ask me about a stock, asset class, be it FX, futures, and stuff like this, I want you guys to be very interactive. So you can use the chat, we will do interactive. Or like what Nixon say, you want to speak or what, we will try to see if we can or not. All right. So let's recap on what we learned the last session, which was in end of June. Okay, so first thing, remember what I said that to go into a trade, you need to understand what is the global macro environment. Start from the US, Eurozone, and then North Asia, like Japan and China. All right, these are the global markets. They are the biggest market of the world. So that's why you need to go into it. And then how to understand them? I think the best way understand that GDP not that much. GDP is just to give you overall on how their economic progress is going on. All right, and GDP numbers for the US one is always on the revised policy. So you really need to in-depth reading. You need to have an in-depth of the to read the GDP numbers and stuff like this. All right, so next one will be on central bank rate decision. This is very important, especially the G7 central banks. All right, namely like Bank of Canada, Federal Reserve Bank of England, RBA, Reserve Bank of Australia, and then you have Bank of Japan, uh, European Central Bank, and then I think the next one will be blah, blah, blah. Can't think of one, but yeah, these are the one. All right, monetary policy, how much money they're going to do. Like Japan, they are doing a QT. They are halving the quantitative tightening process on it. So from this, we will know where are the funds flowing to, and then understand the inflationary pressure because inflation, all deflation back in 2016. You really need to understand all of this. All right, next one. Remember I said that why, despite some downturn, when initially everything was in red, but some of the sector performed well better than other. Well, because fund flows. All right. First up, I think fund flows always says that the um what was the what's okay, sorry, fund flows, because no hedge fund manager, no portfolio manager can hold more than certain percentage of its cash in cash, money market, or bonds in the allocation. So they need to park their money. They need to strategically park their money into a sector that they think that is best. Which asset class is going to fly? Commodities or the FX market? All right, so these are the intermarket analysis on this. All right. So and then which country is the leading one? So for ASEAN, Malaysia leads for now, and then followed by Indonesia, and then Singapore, Vietnam, and then finally Thailand. Thailand is weakest of that among all. All right. So once you know that, why are the funds flowing to which country, ASEAN, for the North Asia, you know that are people exiting the Hong Kong market and the Chinese market, and then they are going to Japan and maybe South Korea and Taiwan. All right, last sector rotation. So remember this relative rotation RRG, or you can using chart draw trend line to see is the uptrend still intact or not. All right. Okay, so this is all the recap that I have. Understand this, and then if they are first timer, you can rewatch it back in the link that Nixon has provided early on.
Yes,
And
yeah, Wei Ren, allow me
yeah,
to interrupt. So yes, the recording
yes,
that Wei Ren mentioned is actually in the link that I share, which I'll share again. So it's actually the Learn from the Pros webpage. So Wei Ren's charting market sessions are all recorded, and you can actually access the recording from there.
yeah.
Right, thanks.
Okay, thank you. Okay, so what's today's topic will be on the momentum indicators. There are two. Because of time issue, I will only touch two: MACD and stochastic oscillator. Both are momentum based. Um, um, Stochastic will be on midterm. MACD, I prefer it to be a long term. All right, so a little bit of introduction on MACD. So the MACD actually derived from the concept of exponential moving average, and then some basic of like Wilder's RSI kind of concept. So if I'm not wrong, is by this person. I can't remember the person who created it, but is popularized in the 70s. So it's calculated as a difference between true trend lines. All right. Trend line means they are flowing trend line. Using exponential smoothing methodology, which lasts, I think, if you have no basic technical analysis, you will basically know that there are two types of moving averages: exponential and simple. My colleague from the US love to use simple. All right. Okay, so the momentum value is further smooth to give a signal line. All right. The most common form of MACD, the default setting will be on 12-day and 26-day exponential smoothing. So the signal line is used to give like a crossover kind of thing. It's further smooth using the 9-day out of this 12 and 26-day. All right. The MACD line can be correlated on this. I shall not go through all this because this after I try to explain, I really can't. So I will just, you can just take the picture of it, or you can go online and search or for the further use. All right. So basically, these two lines, all right, it will give you the signal like how well the trend is, and based on this, if there's a crossover, like the normal EME kind or SME kind of crossover, the crossover signals something that the trend may change. All right. So take note why the crossover is important, because that will explain to you why I prefer to be elongated. I prefer to use higher periods reading on something on the MACD, the modified MACD. Right. Actually, it's not. This concept is not by me. It's by my senior mentor in the company. He uses this back in 2012 or something, and I seen it. It produces lesser noise, and then it goes wrong. All right. So, trading MACD. All right. The MACD is actually a momentum plus a confirmation of a trend indicator. So for this purpose, only the MACD and signal I use the following way. So basic, close eyes, textbook style. Buy when MACD line crosses above the signal line slower. Sell when the MACD line crosses from the above to the below the signal line. Okay. So you can see that DBS. All right. I use this. example. So the MACD line is the blue one, and then you can see that this is the setting that I have. Okay, so it crosses, and then after that, it goes down. The histogram itself, right, is actually, which will be explained later, is actually the difference and the calculation between it. All right, so I can see that where,
here. Sorry to
sorry,
interrupt. Is it possible for you to like zoom in on the chart so that we can,
uh,
yeah,
I try,
yeah.
I don't know if I can or not. Is it zoom in?
Yeah, you can.
Okay, okay. Okay, can. Okay, thanks, Nixon. All
Thank you.
right, so you can see that there's the MACD line is actually a blue line. The signal line is the one that is produced the night, the so-called the night period, the 20 period shooting of the MACD line. All right, so once it cross over, you can see that it's really like okay, let me use the anode onto it. Like you can see that before the sell down happens, all right. And plus there's a bearish bar, and the final price action on this bar that was on the first week of August, before August start, is actually came down already. So gap down, and then I call a sell call. So now it rebounded, but has it gone through? Has it like what do you call it? Uh, I think confirm recovery. I'll say too early to tell on this. All right. Okay. Hang on. Okay. All right. So next, okay. So this is the setting that I have. So if you want to use it, you can use this thing called trading view. There's a free version by .com. You can use it. It's absolutely free. But if you want to pay for it, you can, because the paid version will have allow you to customize all things. But if you would like just want to use the MACD and some indicators, then yeah, the free one is sufficient for you already. So these are the settings that you can know: 50, 200, and then 20, and then these are the one that I use it. Okay, so I said default setting is always 26, 12, 9 on daily period chart, but I prefer to use 200, 50, 20 to avoid whipsaw and false reading. But you can you use the default setting for MACD? Yes, you can. All right. Couple with a price action, divergence, and then you can actually use it. But instead of using a default, I'd like to encourage you guys to, after this session or tomorrow, if you are free on weekends, nothing to do, right? Open a chart, go and try and backtest with different setting, or maybe on 10 asset class, 10 different equities, and stuff like this. All right. So this will actually allow you to to explore, all right, and better suit your style. All right. Uh, Maybe after today, doesn't mean what I use 250, 20, you must use it as well. It depends on what are you looking for. Are you looking for swing? Are you looking for a long-term trend momentum? If you are very short-term, I think you can use the default setting as well. Nothing wrong. Okay, and use 30, 15, and then maybe 11. All right, there's always a lot of ways to do it. So if you look at it, right, doesn't mean that you can see that doesn't mean that this is the, wait, hang on. Okay, doesn't mean that this is the default. Okay, this is the default setting. All right, this is the modified version. Modified version. Okay. So if you can see that okay, so quiz time. All right. Anybody know what is a divergence? Divergence means what? Does anybody knows? All right. Want to try type in the chat? Divergence. Anybody know divergence? Okay. If no one answer, okay, divergence basically means that, do you see that the part, the high and the high over here, but you can see that momentum actually dropped. So this is actually a divergence. All right, means that the chart while going higher, okay, pardon my writing, the chart while going higher, all right, but the momentum dropped. And then you can see that that there's a lot of red bars coming in, weaker bars going up, and then it came down, broke the uptrend line, all right, and then it start the bearish trend. But on the side, coupled with volume, you can see that volume actually peak at the top, all right, which later I will show you the chart. Volume peak at the top, but small candles, okay, means that it is diverging as well. All right, that is the basic of divergence. All right, so if you can look at the whole thing, okay, all right, can look at the whole thing, the whole concept. You can see that the MACD crosses here before it goes down. So you can use the short term, use the default setting, and then use the modified setting, and then you see the discrepancy. Are they matching each other? So if they match, more signal, more confirmation, actually you know that hey, DBS is actually topish, all right, and then likely to come down. So and then you decide where we want to buy. You can buy, but remember just now I said about the crossover of the crossover. All right, haven't crossed over yet, right? So not an optimal time to buy it. All right, so that are you going to buy? You can see that buying pressure remain weak. Gap up yesterday, but selling pressure is still on this. So for DBS, we want to buy based on this. All right, type in the chat, or you have any question, type in the Q&A, and then say why you want to buy and why you not buy based on this. We love to hear your discussion. We love to discuss. All right. In the realm of technical analysis, there's no one answer that fits all. There's no one perfect strategy. There's no one perfect analysis that will say, hey, I'm right, you're wrong. It's subjective. It's open for discussion. All right. It's very artistic instead of science. um, is now hypothesis, the hypothesis testing. You cannot be 100% sure. All right. One thing, new things come up, you will further improve. So how we going to improve our reading on technical analysis is by constantly exploring and then talk to people and then use it going forward on this. All right. Ah, okay. Okay, so I'll move on to the next one. Is called stochastic oscillator. Stochastic oscillator is one of my favorite indicator. So back in 2010, when I first started FX, right, the first indicator I learned from the market from my mentor at that time is actually stochastic oscillator. All right, so stochastic oscillator is by this guy called George Lake. All right, it's in the 50s or 60s. All right, is the oscillator that measure the relative position of the closing price within a past high and low range. All right, so closing price plus high low. All right, so it's not like relative strength index RSI, the Wilder's by Wilder. Wilder is the creator of RSIs and directional movement index. All right, so this one I won't go through, but what I want to share is the concept of this stochastic. What's the difference between the MACD? All right, difference between the two friends and the RSI, which only use the closing price. All right, anything I like varieties, so I prefer to use it on this. All right, and the thing that and the RSI only use the stochastic uses high, low, and close. And unlike other indicator, this they do not be any soothing to introduce a lag. All right, so stochastic always have this thing called percent K and percent D. Don't ask me why they are called percent K and percent D. George Lin, if you want, if I got a chance to meet George Lin, I will ask him on your behalf. Okay. All right. So the next one. So Summarize point, yeah, 1950s here, I'm right. So stochastic tend to vary around the mean price level and rely on an asset price history. Means that just now remember open, not open, high and low plus a close. All right. Then they did a calculation. There's one formula for it, but I'm not going to show it here. You can go online and search. Because nowadays there are a lot of technology you don't need to know. You just need to know what is the concept, what is it used for. All right, so oscillators are some of them are bounded, some of them are not. So rate of change is the unbounded indicator. Stochastic oscillator is bounded 0 to 100. Measurement above 80 means that asset is overbought. You can actually do it at 90 if you think that is the fair one. And then measurement below 20 indicating that it is oversold. All right. All right, 14 period. And 3 is percent K and then percent D. All right. Which I will show you during a live charting on how is it like to be done. All right. But I like to use the what do you call it? Just now. Okay, I like to use the 53 period 11 11. All right, instead of 14 5 5. All right, 14 periods. So I like to use 53 periods. All right, why 53 periods? Okay, so 53 periods is actually a plus and minus a quarter period of the trading month in the quarter. So equities. So one month we got 21 days. One quarter 3 months will be around 63 days period, but I minus 10. All right, because I find that 63 is too much. The reading is too laggy, but I change it, optimize it into a midterm. So if you can see that it provides a smooth outlook. All right, so stochastic, right? A lot of people, including me, last time I make a mistake when I see that the when I see that overbought, I buy, but I need oversold, I close. All right, this one is the initial first. Okay, stochastic, there's 3 steps. All right, first up, when it crosses, it means that the stock is flashing the first warning sign. If it go down, second warning, close below 80, means that it confirmed likely to hit lower. Okay. For this case, you can see the 1455 crossover, but have it crossed up. Likelihood there will be, so this one will be a up move. So you can adventurous, you can buy it over here. Once volume peaks at the bottom. All right. Like what I mentioned, volume peaks at the bottom or volume peak at the top with large candle size of exhaustion at the temporary. So there might be a mean reversion to the upside. Mean reversion means that the stock might move up going forward. And then but trend is still down because of lower low, lower low, lower high, lower low, lower high, unless it breaks above $35.22. All right, volume is still low, buying volume is still low, so it may be just short covering on this. Okay. All right, there's a Q&A. So all right. Well, that said, the various stocks like stochastic and moving average on our CGS. Yes, iTrade or Prosperous Us do have the setting. You can use it. All right. If not, you can look our retail team. If you want, you need to know the app, how to use it. You can actually ask. All right. Or if you don't really like, okay. This is recorded. Okay. To Nixon, please. If you think that the interface not nice, not me, if your guys think that interface not nice, you may just use trading view and then go to iTrade and then set your and then set your setting over there. Okay. All right. So right now we come to a part we put all together. All right. Volume, MACD, and stochastic. All right. Okay. So first up, any questions so far? No question, then I will just go on. All right, while I'm talking, you can, this is very important. Okay, use this as a cheat sheet for you, or use this as uh, uh, a guide. All right. And then after that, from the guide, you can have 1A, 1B, subsection. All right. This how you generate your ideas, your trading. Okay. So trading can be very what? Simple. All right. Okay. So start from weekly chart. You see the trend at a glance. So where's the chart at? Is it at the extreme top, or is it at the extreme bottom, or is still trending in the middle? Correction or not? All right. So go into the chart, and then once you know the weekly chart, okay, one look, I know moving average, 200 a week, 50 week, and then 20 week, all pointing up. Chart at the top, strong bullish trend, and then you look at the volume, weekly volume. You see that, okay, I think too high. Do I want to chase it or not? You can chase. Yes, you can chase. Allocate proper size for position signing, or you can just wait, or you just find another stock. There are few thousand of stock. There are 100,000 over stocks in the world for you to look at it. All right, in US alone, all right, there are so many stocks that you can look at it. All right, you just have to need to have a system, a methodology to enter the trade. All right. Okay. So next one, go into the chart and then see the volume, MACD, and stochastic. Where are they located at? This one will be forget. This one will be more on the. This one will be more on the. Wait. Hang on. Daily. Okay. More on the daily chart. Okay, so then from the and then know that, hey, if there is on from the weekly chart at the top, but daily you can see that, hey, there are some consolidation ongoing. Selling pressure is weak, or buying pressure is weak. Then you know that, hey, maybe you can take a chance. All right. Then you need to look at the, I mean, volume first. Volume. All right. Remember, always refer to your volume, and then do this as a, there are only 4 steps to do it. All right. Okay. So next one, then after you know that, we conclude that the volume and stuff like this. All right. Then you will plot out your support resistance line. All right. Where are you? Then you can strategize your buy and sell queue. Basically. So it's that simple. 3 points only. Start from the higher time frame. Or you can go into the monthly chart if you want. All right. Go into a daily chart and then see a volume, MACD, stochastic, and then after that, or you can look at the trend line as well, or your moving average. Okay. Or for me, I use Ichimoku as a basis, but Ichimoku is a thing by itself. So I need to go on to and open another session to just talk about Ichimoku, because it's just an indicator. There's a lot of things to touch on as well. Okay. Okay, let me erase all this. Okay, so all right, so all right, so I want to take this time to talk about the macro sector. Some of the things. So are we in the recession after a cross? I would say not quite. Because you can see that the leading economy indicator. All right. I shall type it out for you. Le Leading economic indicator. All right, you can Google it, and then you can see how is it like. So basically, you take 10 leading economy indicator in the US, and then they aggregate, give a weightage, and then come out with this line. So you can plot this against the I use the Dow Jones. Why Dow Jones instead of not S&P 500? Reason is being because Dow Jones is really the blue chip or the blue chip. The fund managers do like to use the Dow to actually spot the market, to see where's the health of the market. So when Dow was in corrective weak phase, means that you can see that the US economy is actually not well. All right. Okay. Be it the tech sector boom, all this. So it tipping on the unbalance. So for the Dow is much more stringent in their Dow 30 constituents. They recently replaced Amazon in, so they are like more of like okay, a better reading of the economy itself and the market itself. All right, you can see that the LEI, are we approaching a recession? First, I think first up, I think when 2021 we peaked and then we came down very much strongly. You can see that maybe you can say that this is a divergence on this, all right, accelerated, but I think that we may make one more new high before falling up. So where's the new high going to be? I think 44,000 is quite a good level to watch out for before correction down. Recession is not in this year. I don't think so, based on the reading. But it be next year? I think highly will be. Why? If you look at the yield curve, the 2-year, 10-year spread, this is a very good predictor um of the or what do you call of the recession. All right. You can see that pre.com 1999 it inverted and then accelerate break zero up, then after that recession down. All right. Pre-GFC inverted went up and then came down and then went up and then you can see that the recession came, the Lehman Brothers collapse. So this one was COVID, and then after that it goes up, the yields go down all the way down. This is the deepest that we have seen, and it uninverted for very long. So now recent inverted for very long. So now right now it's going to uninvert. So once it breaks zero, then you start to worry. And then it goes up. So why does the uninversion the uninversion of the 2-year, 10-year spread will cause something recession? Okay, so the 2-year, 10-year spread means that 2-year means that the 2-year treasury bond, 10-year treasury bond. So 2-year is a very short term. So if the yield, the spread yield, the yield spread actually invert, it means that the 2 years yield is actually higher than the 10-year yield. So means that people are short term, they just want to get a quick buck, they are not confident. But once it unwinds, all right, they want long term yield return. And then means that funds will flow to the longer dated bonds, and that's why it causes exodus of funds into the bond market. This is a very simple analogy on it. So that's why it can be a very good predictor on it. And plus, next one, this one, yield curve. All right, so the blue line is actually the Dow Jones Industrial Average. It goes up all the way, inversion, inversion. So you see that the inversion it came down, inverter, and then actually from the 2005 inversion, right, 05, 07, right, you can see that this one, 07 start to have a first dip already. All right, then 08 it just go down all the way. All right, so for rate cut, don't wish for. Why is because you know that the actually every time it pauses the rate, market do have a boom, all right, and then consolidate a while before correcting. So every time you have a rate cut, you see, market 3 rate cut is a trend. Say that, oh, but 09 doesn't happen. No, 09, 2019. Actually, if you can Google the news, I was in Philip Capital that time starting work. So when they cut rate, market actually flew up. But until COVID actually came down all the way. This time, why is the recovery so strong? Because Jerome Powell actually started QE very fast. Within a week, money flood into the market. That's why the fund manager use the money, they shore up the equities market. Well, still in the bull run, but I'm not sure. So once you cut rate, maybe you can start to unwind your position. Actually, now if you got some of US stocks goes into, you can just unwind your position and then keep some bare minimum position for Apple, Microsoft, maybe for Singapore like BBS, etc. Like this. Okay, so thank you for the session. All right. Before I hand over to Nixon, I would strongly suggest you all join the HGX, our Telegram group. Please join and give us your support, and then I will communicate with you all there on a daily basis, or you can comment on this. All right. Telegram is very good, so I'll leave on this before I pass my time to Nixon. So I give you all a minute of time. All right. So scan, take your phone and scan. If not, email me. I think my email is here. All right, and then you can ask me anything, or you can go through Nixon, and then Nixon will ask me about email. All right. So Nixon, before I go in the Q&A and the live chatting, sharing about the capital DC and UOB, I would like Nixon to take over. He has used something. Nixon, to you first.
Yeah, okay. Yeah, so the slide that we were sharing, yeah, just scan that one. I think there's something wrong with my video. Apologize for that, but I think you can still hear me. Let me try again. All right. So that is a Telegram group that we already shared. So do feel free to join that group. It's a free to join, and then you will get for updates on the charting that we're going to send out. I think also his research colleague will also send out in the group as well. Am I right, Wei Ren?
Yes, Billy actually will be sending out some of the stock with momentum,
Yes,
and then
yes.
some
So
of
it's a
the
very,
things that
yes, it's
very
a very,
comprehensive kind of
very
sharing.
very informative group to join. So highly recommended.
Thank
And
you.
before we move on to a Q&A session, just allow me to share my slide again. Okay. All right. So yeah, so what you see here is the feedback form. Appreciate if you can just use a Google phone and scan the QR code, or just use the URL. So allow me now to cut and paste the URL for you for a while. And I'll put that in the chat box for everyone. Okay, so appreciate if you can take some time to give us some feedback. This is very important to us because we would like to hear your feedback so that we can improve the program, as well as, of course, your support allows us to justify bringing back this Learn from a Pro series of webinar to you every month, and also the next series as well, so that we can get management support to bring the session to you for free. So appreciate if you can give us feedback on this link. Now let me move on to the next slide. Yeah, which is back to you, Wei Ren, for questions.
Okay, I think there's isn't any question, but I will just want to go through UOB. All right, so UOB, actually, when did UOB announce its result? Actually, you can use this is a beauty of trading view. All right, so you can use dividends earnings on this. All right, okay, look, so what are the best stock to buy? Should there be a recession? Those kind of utility stocks, those like Singapore Semcon Industries, and then like Sheng Siong, this guy, because consumer staples, utilities, they are defensive. Telecommunication is one of them as well. Singtel. That's why you can see that Singtel didn't suffer much aftermath of the. So later we can go through Singtel. All right. Okay. All right. So you can see that UOB actually has the earnings on the first of uh, uh, 1st of August in the morning. So my colleague actually has a very high conviction call on UOB. But is it very strong? I think yes, 3650. You can see that always any research report, right? Always look for the title business growth. I think UOB is good. All right. Anybody work in UOB, can let me know also. All right. I believe some of you work in UOB. I think UOB is a nice place to work. Yeah. Lisa, please cut that out. Thank you. Okay. Later my boss here, and I say, oh, go, you. Yeah. Okay. But anyway, optimistic, Fed cards, first thing Fed cards coming September. All right. So it could boost the business. All right. I think UOB is a good buy. I mean, can look at the valuation and stuff like this, key statistic, net interest, blah, blah, blah. You are very good, accounting. You can look at that. I don't like. Okay. But when 1st of August, where are we? Okay, so 1st of August, if you decide to buy on the next day, earnings good, uh, you buy. All right. Okay, then knowing that next dividend is coming soon, ex dividend means that what? There will be a new, there will be a downside. All right. So at a period of time, all right. Do you want to buy or not? UOB. I mean, given the hindsight, if we are here, do you want to buy? Okay, so let's say I use MACD, blah, 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 on the moving average. Yes, okay, possible because why? This is a flat pattern. Okay, all right. This is Jackie. Thank you. This is a flat pattern, but you can see that the stochastic is actually. Do you remember first side? You will see that oversold. All right. I actually would prefer to actually wait out over here. So if you go in, okay, then you can see that bearish engulfing came already. All right. So during earnings, bearish engulfing came near the top. Volume was relatively weak. Below, if you see that the volume on the 31st, buying volume was actually weaker than expected. All right, didn't really go through the above the 20 moving 20 day average on this. All right, so and then rate of change is actually declining. You can see that from this. Okay, rate of change actually declined. And then remember just now what I shared about divergence. Uh, yeah, this one don't have. All right, but if we use another copy, all right, MACD chart, stochastic oscillator chart, okay. Okay, so you can see that, hey, both the 1455 got a oversold, and then bars for the selling pressure is stronger, and then you can see that the buying pressure is starting to get weak as it goes. So you can see volume dips below the millions. All right, so I wouldn't recommend to buy at the top, but if you want, you can. Can you chase the top or not? Yes, actually you can. If you look at the weekly chart, 29, I think that it is toppish. I think this is on the 29. Okay, first up is we are nearing a oversold already. So if there's so much way to share with you on this, and then maybe using the MACD chart. Okay, so MACD crossover a bit late, but actually on this you can see that there's a crossover on this already for the default one. All right, means that histogram start to turn negative. All right, and while at the same time you can see that the positive histogram is on the way down. So for UOB, when the bars are very very thin, all right, I won't recommend to buy on the top. And then you can see that but my friend like to say, hey, but over here it's the same thing what. All right, but you could buy, you could generate up, but there's one time already, second time likely to go into correction, especially you look at from the weekly chart. All right, okay, breakout and then goes up, and then you can look at the Ichimoku, what Ichimoku, that 1.618% extension level. So likely to be a reversal already. So I would have waited on this and then look for other stock to punt in. Definitely not a bank. Then I'll go to this. Maybe go to Yang Zijiang or okay on this. All right. So far, any questions that you would like to ask before I move on to the next one, Capital DC? Okay, it seems that there's no question. So I'll go on to ODC. Actually, I have a buy call on UOB back in 26th of June. All right. All right. So 26th of June, why despite because they haven't reached oversold. All right. And then it actually went up. All right. 26th of June was over here. All right. Then it came up all the way. Okay. Then it goes down. Okay. OCBC, same thing. All right, same. I think OCBC may one more downside before attempting a rebound. All right, so we are for back to the banks. We are actually on the downside already. So now it's building up for upside, but no clear but strong buying signal yet. So I won't jump in the gun for the banks for now. All right, so I will wait. But if you think that based on you think your gut feel say die can buy. Who say cannot? All right. The falling knife is stopped over, but buying pressure will remain weak. So I would want to buy the spot maybe like maybe 10% of it and then allocate the rest maybe at $27.42. Example. Right. Remember just now I said about support resistance line? Right. I will have actually wait at $27.72 over here. All right, before attempting. I think there will be one more down leg to this level. All right, before attempting a rebound. Okay. All right. OCBC is actually I got a sell call. I can put a link over here for you. All right. Okay. So let's move on to Capital DC. All right, Capital DC. I have been on a very strong run up. 10th of May. Positive and then reach. So this on the 30th of July. This is this on this. So has gone up by this up by around 5%. All right. Based on the fact that okay, remember why I like to use the elongated expanded version of stochastic because it give me the momentum, rising momentum, oversold, but none, and then trend is still up, high, low after breaking the 10-month period. I think still have a chance. Volume wise, breakout over here, 30th of July. Breakout, yeah, is above the yeah over here. No. All right, 30th is here. Broke up above the 20 period moving average, so it's a good actually a good buy. And then if I remove the Ichimoku, this one. Okay. Golden cross. Now got the golden cross, and then back end. Let me see how is it like. For that. Okay, so yeah, so the 20 is above that, and then yeah. So short term, short and midterm up, and then just waiting for the midterm moving the black moving average cross over the long term moving average. All right, so this is Capital DC, and then after that, my colleague actually this the May 10th of May, bottoming out play. When you look at the bottoming out play, you can see that overbought oversold divergence in, and then breakout falling wedge, and then it's above the cloud. That's why I take a jump and I take the gun. All right, so this one is a whole call means that there is a chance that the stock is on the downside. All right. Okay, so clarity and then blah blah blah. All right. So when you read a report, right, always read the top and then the 3 points and then goes into the thing, and then you go to the chart whether let's say this was on the 29th of July. I see that 29 you say rebalancing and then nearing $1.1 I reach my full target price already. Do you think I have a chance? Yeah, if I think I have a chance, I go in. All right. Okay. All right. And then last one. Yang Zhijiang is out today. Yang Zhijiang earning very good. But despite it goes up all the way, but I remain very cautious on Yang Zhijiang. Why is because first up, you can see that yes, no doubt, it's on the uptrend, all this. But we are near on this, we are near the top. It did not very much break the top. So I think that there may be a bull trap first up because of the divergence that we have. We are oversold, overbought again. And then MACD, you can see that is actually decline. All right. And then if this one crossover, then means that we are looking for correction. So if you like Yang Zhijiang, die must buy Yang Zhijiang. What should you do? Right? Anybody want to make a guess? What should you do? Do you want to buy still, or do you want to wait for a correction? Do you dare to chase the top? Or you can see that back then 26. Yes, wait, Sally, good. Okay, I would say good, but means that you rather wait or you look for another stock. All right. China, yes, good. Wait. All right, because you see that it went up and then you have the sharp correction near the support level over here. All right. And then it rebounded. So if you bought over here after this and then this level, let's say you have 14%. All right, wait first. All right, if it goes up all the way, you miss it, you miss it. Don't worry. I rather you miss it than you lose out on this. All right, remember always, market like to catch people at the top, give you FOMO, make you want to get to enter the market strong. All right, okay. And then next one will be okay. So today one thing DFI, buy or sell. Do you want to buy DFI? Anybody? Okay, I'll give you a weekly chart. I won't buy DFI, even though is down. Okay, all right. Okay, so I won't buy DFI. All right, and then today we just buying. Yes, they're buying pressure, but it's going to be short term. All right, and then after that it resumed outside already. So many things, and the fundamentals of DFI is not good. Cold storage was so expensive. 7-Eleven expensive as well. All right. Okay, next one. I think, okay, last one before we end the session. All right. All right. So for UOL, okay, let me check whether any Q&A. Yes. Singtel, yes. Okay, we do Singtel and, we do Singtel and UOL. Okay, Singtel. Okay, Singtel is actually my transporter pick as well. So let me find, okay, 10th of July. Okay. Singtel, I have this. Despite oversold, I still buy because yes, there will be a replay. Don't worry, Chan. Okay, I call you Chan because I don't know. I'm very bad at pronouncing names. I very short tongue. So if I pronounce wrongly, then yeah, I respect people's name. All right. Okay, so yes. All right, you can see that for Singtel, why I did it on 10th of July is because momentum is still rising, volume remain, and then DMI, blah, blah, blah. It's just that stochastic is oversold. But I remember what I said, oversold, don't, is the first signal. But I just think that, oh, maybe you can buy for short term, then wait for correction. True enough. All right, where's my Z74? This is when? 10th of July. 10, 9, 10. So it went up all the way, hit my target price, came down, supported at 280. So remember what I said about the onslaught. So Singtel, I will say that defensive, but I will say that wait for another closure between 270, 264, and 280 to gain for a buy. All right, buy at a buy sparingly. All right. Volume remain healthy, but I don't like this rejection candle at the last hour. So KIV, how's the opening today? Tomorrow, I think there will be a positive opening before coming down again. All right. But Singtel, no strong adverse selling, but it's nearing the top. Momentum is weakening. You can see that the histogram is down. ROC is down. Volume peak at the top, near the top. So I will say that I'll stay out from Singtel first. All right. Okay, Capital Corp still on a downtrend. All right, downtrend. Nothing much. Volume remain dwindling down, so I won't touch it. SIS sister is it? What? Citrum? I don't know, man. Sorry. You got Donald. I don't know what is SIS. Capital Corp, yeah, I done already. So yeah. Okay, so let me see the chat. Anything? UOL, yes, UOL, U14. UOL is still on downtrend. Won't buy. Because despite MACD is in this very very nice one, but volume you can see that very thin. Okay. Very thin. So I won't actually touch it. All right. Um. Yeah, it's basically hellhole. You can see that it's basically on the ranging part since 2018 downside. Will it be a bottom rebound? Maybe yes, but chances are maybe low. It may just go lower to 491 before rebounding. Property developers sector stock they are not performing well. You can see city development is as well as well. All right, Dynamic also not this. Okay. Oh, SIA, sorry. Okay, Dynamic, you can see that it went up and then break up. Correction down 50 up, but I think that there is still room. But you can see volume start to dwindle a bit, so be careful. And but I think there's still room because MACD is still relatively strong, long term wise. And then so far oversold is done, rebounded. So you can see that if I'm going to plot the arrows, is up on this as well. Okay, so nothing much. Okay, and then SIA is downtrend. Downtrend, nothing much. MACD is down, stochastic down, everything is down. So I won't catch a falling nowadays. I think that there's still room to fall towards $5.73. All right. S63, that will be my last one, I think. Okay. All right. Will be ST Engineering down. I think there's a okay, see that some same setup. You can see that weakening bars ranging at the top, then come down. So I think that everything is signaling a sell for ST Engineering. All right, I think it might drop lower. All right, so I think it's time to get out for ST Engineering on this. I might even issue a sell call on this, based on the fact that we can look at the chart. We are near at the top. Are we at the top? Yes, we are the top. All right. So potentially we can look at the oversold. All right. If the oversold is likely to confirm, so likely one more upside, then goes our way. So support wise, I'm looking it to test at $4 on SD Engineering. All right. So I think that's all for my sharing. Is there any questions for me? The last one. If not, I shall pass my time to next one. Thank you for a session today. All right,
Yeah,
Nixon, pass to you first.
thanks, Wei Ren. Just looking at the chat, Did you manage to cover OCBC? I think there was a
Yes, I did.
Any comments on OCBC?
Yeah, I did cover just now.
Okay, great then. So we are done. I think there's no further questions. So allow me to just share my screen then. For one. Okay, so we are done for question. Thanks for all the questions. I hope it has been useful. I know we may not have time for everybody's question because we are also mindful of time. But we hope to continue doing this session soon so that we can continue to answer some of your questions. But just let me run through the Learn from Approach. I've shared this link with you. All recordings for Chatting Markets will be posted on this webpage. So if you missed today's session or you want to go through and view again today's session, as well as many of the other previous sessions that Wei Ren has done, you can go to the webpage, the Learn from the Post webpage, and you can view the recording over there. So today's recording will also be posted on the webpage, but give us some time to get it ready. So probably by next week, you should be able to access that. And also, I'd like to invite you all to register for the next session under Learn from a Post, which is Market Talk by Kong Hao. So it will be a very interesting topic. The topic is from AI euphoria to market reality. So how to position your Singapore investment landscape. So it's on 29th August 2024, 7:30 same time. So allow me to just share the URL with you also for this one. Okay, so that's Market Talk. The URL is there, or if you want to scan also, you can scan on the QR code. And then you can register for the event. And we will love to see you there. So as a last reminder, do help us with the feedback form. Again, the link for feedback form, I shared here. Hold on, let me pull it out as well. Or you can just also use your phone to scan and give us your feedback. So we look forward to your support so that continue bringing this series of webinars to you. So with that, we are done for today. So appreciate everybody's time. And of course, a big thank you for Wei Ren for his sharing. Do register for his Telegram group because you can then get very periodic update on the technicals of the different stocks. So with that, thanks everyone. We will see you soon.